This video is covering financial planning and cash flow management for your events business. We'll go through budgeting for startup costs, forecasting revenue, and most importantly, how to manage your cash flow effectively. First, let's talk about budgeting for startup costs. Every business has upfront expenses, and knowing what to expect helps you avoid financial surprises and prepare for a stable launch. For an event business, startup costs may include licenses and permits, insurance, equipment rentals or purchases, initial marketing expenses and advertising costs, and office supplies. Here are some common startup expenses you'll want to budget for. Business registration and licensing covers the cost of registering your business and obtaining the necessary permits. Costs will vary depending upon your location. Insurance, such as general liability insurance, is usually a must for every event business. Depending upon the type of events you host, you may also need additional coverage like event cancellation insurance. This cost can be delayed until you are about to host your first event, but plan for it. Regarding equipment, you may need to rent or buy essential equipment like tables, chairs, lighting, sound systems, and staging materials for your events. For your office, you may need to think about equipment like furniture leases or printers. Regarding marketing, allocating funds for initial marketing for your events is essential to build awareness and attract attendees, especially when you're first starting out. For your office, the setup includes items like rent, a computer, software, and other supplies to help manage your operations. Now, of course, I didn't cover all of the expenses, so think through it and give yourself a financial cushion, typically 10 to 20% of your total startup costs. This safety net helps you cover unexpected expenses or delays in generating your initial revenue. Now let's talk about revenue forecasting. Predicting your income might feel challenging, especially when starting out. I mean, how do you know how many tickets you're going to sell? But forecasting revenue is an essential part of financial planning. It allows you to set realistic goals, plan for growth, and make sure that you're on track. By estimating the average revenue for each type of event you plan to host, consider different revenue sources like ticket sales, sponsorships, merchandise, and concession sales. Use industry benchmarks to estimate what similar businesses are earning and start very, very conservatively. If you're hosting ticketed events, calculate an estimated ticket price and project the number of tickets you expect to sell. But again, be very conservative. I've seen it a million times where a first-time festival thinks they're going to sell 10,000 tickets. The reality is, these dreamers end up seeing 1,000 to 2,000 people in their first year. In fact, it happened to me. Many events don't make money in their first year, so plan accordingly. For private events or venues that rent space to other event producers, you might have a set fee for your services based on your event's complexity, setup, and time commitment. So keep each revenue source in mind and set monthly, quarterly, and annual goals. Alongside your revenue forecast, create a cost forecast. These are your ongoing operational expenses like rent, utilities, payroll, software subscriptions, and any other recurring costs you might have. Comparing revenue to cost forecasts will help you set realistic expectations for profitability and understand what you need to do to bring in the cash to break even. So next up, let's dive into cash flow management, because cash flow is essentially the movement of money into and out of your business. Even if your business is profitable on paper, poor cash flow can cause serious issues and make it difficult for you to pay bills, vendors, or employees on time. In an event business, cash flow can fluctuate significantly. You may have months with high revenue due to multiple events, followed by slower months because you had no events. To manage these ups and downs, it's really crucial to plan ahead. Regularly track your cash flow. Use accounting software or spreadsheets to record all incoming and outgoing cash. Break down your revenue and expenses by month to identify patterns and predict when cash flow might be tight in the future. You'll get better and better at it. When you first are starting, you'll have to accurately project when revenues will come in. Be sure to assume most event revenue won't come in until right before the event. If you see a cash flow gap where expenses may exceed your income, you can plan accordingly. Here are some strategies for that. Build a cash reserve. Ideally, set aside funds equivalent to at least 3 to 6 months of operating expenses as backup. This cushion can help you manage unexpected expenses or periods with lower revenue without risking operational stability. The second thing you can do is negotiate payment terms. For example, you might arrange to pay vendors on a net 30 or net 60 terms basis, giving you a bit of breathing room after the invoice is due. Or try to negotiate no deposits for your suppliers, or deposits due right before the show with the majority of the balance due immediately after. You can also collect deposits. For larger private or corporate events, collect deposits up front. This ensures that you have some working capital even before the event day arrives. You can plan for financing. If your business is growing, consider planning for additional financing. This could mean setting up a business line of credit to help smooth out cash flow or applying for a small business loan for major expenses, like buying equipment or expanding your services. You can also raise capital from investors. If you're looking to scale quickly or have significant startup costs, consider raising capital by seeking out investors or partnering with other businesses, or even using crowdfunding. Be clear with potential investors about your business goals and financial projections to attract those who align with your vision. There are many financial tools to help with cash flow tracking. Besides your accounting software, you can also use tools such as BlackCalc. Some of these tools can generate cash flow reports, projections, expense ratios, and more, giving you insight into upcoming shortfalls or surpluses. They can really help you plan. Now, let's talk about a few common cash flow pitfalls to avoid. The first is relying solely on credit. While credit lines or credit cards can help, relying too heavily on borrowed money can lead to debt that's hard to manage. Not separating personal and business finances is another big one. It's essential to keep your business and personal finances separate. This makes cash flow easier to track and prevents any surprises. It can also prevent liability. Ignoring small expenses is another issue. Small purchases can add up quickly, so it's essential to monitor all of the expenditures. Inaccurately predicting revenue is probably the most common issue and one of the harder things to get right. The more conservative you can be, the better when projecting event revenue if the event doesn't have a history of attendees and income already. A great way to stay on top of cash flow is to regularly create a cash flow statement. This document records all cash inflows and outflows over a set period of time. Most accounting software can generate cash flow statements automatically, but even a basic spreadsheet will work. You'll want to review your cash flow statement monthly. Look at your opening balance, cash inflows, cash outflows, and closing balance. A monthly review allows you to spot trends and take action before any cash flow issues become serious. Now, to summarize, effective financial planning and cash flow management starts with setting a realistic budget for your startup costs, forecasting your revenue and expenses, actively managing cash flow. By monitoring your cash flow regularly and planning for fluctuations, you'll ensure your event business has the financial stability it needs to thrive. With these tools and strategies in place, you're building a solid foundation for a financially healthy business.